So shopping for interest rates, which is a pretty big deal. Certainly when you're going to buy a house, different lenders, different banks, different credit unions, different brokers have different interest rates for the same product, for the same scenario. And so you want to shop that around. And now with the day and age that we're in with the internet, it's pretty easy to do that. Before it was much more difficult. You had to call different brokers and try to compare scenarios, but now everything is right at your fingertips. So shopping rates is important. It's become probably more common than I think it used to be. But how do you do that? How do you shop different interest rates? Like, how do I know what to shop for, what to look for? And so really what that comes down to is you want to compare the same scenario, even if it's a hypothetical scenario. And usually it is, because it's a good time to shop interest rates is before you buy a house, not while you're under contract. At that point, the clock is ticking, you're closing in 30 days or less, and you really don't want to be kind of comparing different lenders and going with this bank, and then all of a sudden you're switching and it's right before closing. Way too much stress for you, for the lender, for the realtor, for the title agent. So best thing to do is do all of this before you find a house or before you go under contract. And so how do you do that? So you give everybody the same exact scenario. Now, you may have somebody that you know in the mortgage business named Josh that you want to check what their interest rates are. And maybe your realtor referred you to their broker that they've used in the past, and you want to check with them as well. So you explain to any lender that you're shopping with what you're looking for. You may say, I'm looking at a $400,000 purchase approximately with 20% down. I have a 740 credit score. I'm closing in 30 days. This is my debt to income ratio. This is where I'm purchasing at. And I want to know what your interest rates are for, let's say, a 30-year fixed mortgage, or an ARM, or a 15-year mortgage, or whatever it is that you think you're looking for. And really the important piece of that is that you want to tell each lender that you're shopping with that I want to know what your interest rate is without buying points, and what your net lender fees are. Lender fees are in Section A of your loan estimate, just so you know. And you want to know what those lender fees are, and you want to have everybody give you a quote without buying points. I explained what buying points are in another video, but essentially there's a range of interest rates. So lenders don't just have one rate. You could buy the rate down, you can get a rate that has no points, but it's important to make sure that everybody is quoting you the rate without points, because that's really the only way to measure one against the other. You want to measure everybody with the same ruler. So you don't want somebody that has a 4.5% rate and it's going to cost you, $5,000 to get that rate, comparing to somebody that has a 5% rate with no cost. Because, well, which one's better? That's a lower rate, but it's a higher upfront cost. This is no upfront cost, but a higher rate. So what if I ask the guy who has a 4.5 what his rate is with no points, and it's a 4.75, still better than the 5%. Or maybe he's at 5.5, and actually the guy with the 5% is better. So you want to make sure that you're measuring everybody equally. Same scenario, no points associated with it. Now, once you've found the lender that you want to work with, whether it be based on experience, based on interest rates, a combination of both is usually good. It's not always best to go with the rock bottom lowest. Just like anything else in life, you sometimes pay for what you get. Certainly you want to make sure it's very competitive interest rate, but it's not always good to just find the absolute rock bottom lowest that you can, because sometimes you can lose some experience there. It can make the transaction a little bit more difficult, but also sometimes not. Sometimes the lowest interest rate is also the best experience and the easiest to work with. So you want to measure everybody the same ruler. You want to make sure that everybody's giving you that same quote for that same scenario. And then after you have discovered really who you want to work with, typically what's going to happen is most of the time, whoever has the best interest rate without buying points, probably going to have the best scenarios if you were looking at buying the rate down, or if you're looking at an ARM or a 15-year product, usually they're going to be pretty competitive in that space as well. So that is a good way to first target and identify who you want to work with, and then you can start to build that relationship with them, understand how they operate, understand what to look for. They can educate you on different products that they have to try to put you in the best position possible. And then one of the most important things is to, at some point, stop shopping interest rates. So it's good to shop interest rates. You want to make sure that you know what you're getting. You want to make sure that you're comparing lenders and that you're getting a good deal. But at some point, you kind of have to press pause on that. You don't want to shop all the way to the point where you're too close to closing and you're kind of stuck with whatever was last. Just kind of like finding something on Netflix where it's nighttime and you're looking around and before you know it, it's bedtime and you didn't watch anything. Well, you don't want to do that with your home purchase. I've had people come back at certain points and say, I'm closing in 15 days. I never locked a rate. Rates moved. What do you have? like, well, why did it take you this long? And they were just shopping through so many different lenders, they just couldn't say yes to somebody. And then they put themselves in a pretty tough situation where now they're stressed, they've got to rush through the purchase, the realtor's stressed because they couldn't make a decision. So the best thing to do is before you go under contract, shop interest rates, look at different lenders, but make sure you're comparing them equally. No points when you're shopping. Doesn't mean you can't buy points, but you don't want to compare lenders with points with lenders without. And then once you have identified who you think is going to be the best person to work with, kind of lock in with them, get your pre-approval. When you go under contract, look at different scenarios, and then let them take the lead on how to handle the loan process for you, so that you put yourself in the best position possible, the least amount of stress, and so that everything goes smoothly for you, for the seller, for the realtors, for the lender.